Welcome to Casual FX. Now we're going to look at candlestick patterns. Candlestick patterns. When you're trading Forex, you need to understand candlestick patterns. Now, candlestick patterns are graphical representations of price movements in the Forex market. They are graphical representations of price movements in the Forex market. They are formed by the open, high, low, and closed price of a currency pair during a specific period. Now they are formed by open, high, low, and close. Now when it comes to candlestick patterns, you need to understand what a candlestick has to do with. Now a candlestick can be bull or bear. Can be bull or bear. So it's either you are buying or you are selling. So a candlestick has to do with a bull or a bear. But when we're talking about candlestick patterns, it has to do with graphical representations of price movements. That is more than one. It's more than one bull or bear. So this is very important when it comes to trading. Now when it comes to candlestick patterns, there are tools that first reader must take note of. There are tools that first reader must take note of. And these candlestick patterns gives insight of market sentiments and potential trends reversals. Now you need to understand these candlestick patterns, which is very helpful to traders. Now when it comes to candlestick patterns, you can combine it with technical analysis. I talked about that. We have technical analysis, we have fundamental analysis, and we have sentiment analysis. But technical analysis has to do with tools that does not involve news. So candlestick patterns can also be combined with technical analysis to make trading decisions. So you need to understand it very well. You have some common types of candlestick patterns. You have some of them. So when it comes to trading, you need to understand it when you are taking a trade. When you are either buying or selling, you need to understand these patterns. It matters when it comes to trading. It matters a lot. It matters, which I will explain it as we move on. Now let's see the candlestick patterns. Now from the diagram you can see that we have spinning tops, shooting star, hammer, doji, bullish engulfing, bearish engulfing, evening star, morning star, three soldiers, three crowns, three cross. Now when you are trading in Forex, you see some diagrams that look like this. I've explained to you that we have the bullish and the bearish. Now from here, now the green will be our bullish, while the red will be our bearish, which is very important for you to understand. So now you need to understand what this means and how it can affect the market. What is the significance to the market? Now look at doji. Now look at doji. You see that doji is something that you can see in the market. Doji tells you that the buyers and the sellers they are struggling and at the equal rate. Now let's see it. Doji represents indecision in the market where the opening closing price are very close or equal. Indication of potential trend reversal or market indecision. Now when it comes to doji, you need to be very careful so that you not put a trade when you see a doji. Doji is a trade that tells you that you are not sure of the trade. No, you are not sure of the trend. So you don't need to trade when you see a doji. You need to wait and look at the next candlestick that occur that will tell you whether you can enter a trade or not enter a trade. So before you draw your strategies, you need to understand this diagram, so I not enter a trade when you see a doji. Doji tells you that there's what? Indecision. Now let's see next one. You see a hammer. A hammer is what? It's a single candlestick pattern with a small body and a what? A long lower shadow. It was significance tells you that what? Bullish reversal pattern, which what? Suggests a what? Upward trend. Upward trend. Upward trend. Now let's see it. Now let's see a hammer. Now when you see a hammer, it tells you that the buyers were buying, they pushed it up and it came down again, and it formed a what? A bullish hammer over here. Now it tells you that when you see bullish hammer, it tells you that there's going to be what? An upward what? Trend. That means that what? Buyers are in control of the market. Buyers are in control of the what? Market. So many times when people trade, they make use of hammer to enter a trade when it comes for you to buy. So it forms a what? Upward what? Trend. So sometimes you have to wait for you to see a hammer. You need to know what works for you. So you can call it hammer, or some call it pin bar. So it's important for you to understand, wait for a pin bar. Now if you can see that buyers are in control, shows you that more buyers are likely to take over the market, and that there is no seller significant in the market. So at this point, when you draw a strategy, you can buy at this point. When you draw your strategy and your strategy works with it. Now hammer gives you an insight that buyers are what? Going to control the market, that will show an upward trend. Now you can see shooting star here. Shooting star tells you that it's just the opposite of what? Hammer. It tells you that there is going to be what? A downward trend. That sellers are the one controlling the market. You can see that sellers sold it from up. It opened up and it closed down. And you see it opened up. Shooting star. That is the second one. Opened up and it closed down. Now you can see that sellers are in control. That probably there is still going to be more sellers coming down. So there's still probability that no sellers going to come down. So before you enter a trade, you can wait for a shooting star. People can call it shooting star. Some can call it bearish pin bar. Why the hammer can call it bullish pin bar. So it's important to wait for a pin bar before you enter the trade. Now let's look at bullish engulfing. Bullish engulfing. Now you can see that we have the bullish engulfing. Now you can see the first candlestick that sellers were in control, then more of buyers took over the market. Now this can tell you that the second one is more than the first one. That means that what? Buyers overtook the sellers that took over before. So when you see a small candle and you see a long candle, it shows you that buyers are taking over the market and the market is going to go up. Now when you look at this now and you take this red one and put it inside this blue one, you understand? You see that they still left small buyers on top. So buyers dominated this market. So it's just like engulfing shows you that this second one engulfed the first one. It's more than the first one. It took over the market. That means the buyer took over more of the market, and at this point, it's not a point that is advisable for you to trade. You need to hold on to understand how the market forms, because this market tells you that what? Buyers are what? Are in control. While the bearish engulfing tells you that sellers are what? In control. Now you can see that buyers took over this market, then the sellers pulled it down. So when the sellers pull it down like this, it shows you that what? Sellers are what? More and are dominating the market. It shows you that sellers are in control of the market. That means that what? There are more sellers than buyers. So this is very important. If you put this green candlestick inside this, you discover that there is still sellers in this market. So it tells you that there is still more sellers. And at this point, the point that you can also what? Trade. You can also what? Sell. So you can apply this when it comes to your what? Strategy. So don't say it is not important. It's very important. It tells you how the market can close, how the market trend is gonna be. So at this point now, you can see that when you combine these two together, if you combine these two together, you can form a shooting star. You combine it together. So sometimes you need to understand that this bearish engulfing can be in a smaller time frame, while the shooting star can be in a longer time frame. Like now, for example, now in 2 hours or in 4 hour time frame, you can see shooting star. But when you come to 1 hour, 2 hours, you can see that you can form these two candles that will give you 4 hours. Two candles, you can say that can give you what? Shooting star. You understand? Can give you shooting star or what? Or a spinning top. So that is more clear than to that. So let's see a spinning top. Spinning top tells you that what? The first one tells that buyers are in the market, dominated the market. A little bit, sellers too, shows that what? Both of them are equal. So since both of them are equal, it will give you what? A doji. You understand? So combining two together can give a doji. So this doji now, you can see it in a longer time frame, but when you come to, you can see it in 4 hour time frame, but when you come to 2 hour time frame, you can see that it's a spinning top that combines each self together to form a doji. So it tells you that the first one cancel the second one to give you what? A doji, just like simple mathematics. Now this one and this one are equal. So when you combine both of them together, you discover that to give a doji. This doji can be can doji in 4 hours. When you come to 2 hours, you can see two of what? Spinning top. Now you can see morning star. Morning star. Morning star. Now morning star tells you that the first one is a large bearish. The first one is a large bearish candlestick. The second one is what? It shows you that buyers and sellers what? Are almost equal. Buyers and sellers are almost equal. That means that what? Sellers little bit took over the market. They were struggling and sellers pushed it to their side a little bit, like 3% or 4% or so. So you can see that this second one is indecisive. You cannot take decision from there. It's indecisive. You don't decide on that. So you have to wait for the next candlestick to form. So when you see that the next candlestick form now is a bullish, and the bullish is more than the bearish, you can see that what? It shows you an upward what? Trend. It shows that buyers are going to take over the market. The market is going to go in the buyer's favor. Now, this happens, but not all the time. But now, if you can see this now, you can give you a signal that what? Buyers are what? Beginning to take over the market. So when you see a bearish and you see buyers and sellers, now see the first one. The bearish took over the market in the long run. Now the second one, buyers and sellers were struggling. So at this point now, this second point, you don't just enter this trade at this time and say you are selling. If you sell here, this third one will take you out and take away your money. So at this point, you wait for the next one to form. And when you say the next one form and go above the bearish, you discover that buyers are beginning to take over the market, and it's probability that it will keep going up. Now, that is that on that. So now you can see that we have evening star. Evening star tells you the opposite of morning star. Now you can see evening star. Evening star tells you that buyers were in control of the market. Then the second one tells you that the buyers and sellers were struggling with the market, but buyers took over like 3% or so. Now you can see that the third one shows that sellers took over the market. So at this point, you can see that sellers are dominating the market. The probability that the next candlestick that is going to form is going to be what? A red candlestick. So you need to apply this when it comes to your strategy, when you are drawing your technical analysis. Now, so the next one I'm going to talk about is the bullish harami. Now, this one shows you that what sellers took over the market, then buyers took over the market, but it was not more than the sellers. This can you see that it's not engulfing. It can tell you that what sellers are still going to dominate the market. So the next candlestick that is going to form, you should expect it to be what? A red candlestick. A red candlestick, because what sellers dominated the market. The buyers do not control it by it being long. You can see that the buyers was small, and the sellers took over the market. And the next candlestick that's going to form it will give you an idea. This gives you an idea that this candlestick that's going to form is going to what? Be a what? Red candlestick. Red candlestick. So also the bearish shows you the opposite, that the bullish controlled the market, then the bearish was small. So it just tells you that, gives you an idea that this market I'm seeing like this is going to come in a bullish form. That is the bearish harami. Going to follow the trend pattern. It's going to go on the reversal of the bearish. You understand what I'm saying? It's going to go the reversal of the bearish. That is the bullish part. Now you can see pin bar. Now this is a bullish pin bar, two bullish pin bar. Can you see a bearish pin bar? So this especially is good to trade this pin bar. When you see a pin bar, it can tell you that what you can enter the market. If it's a bullish pin bar, you enter the market in the bullish side. The bearish pin bar, you enter the market in the bearish side. Now, so now you can see three soldiers. Three soldiers tells you that what? There are what? More of buyers in the market. That means this gives an idea that buyers are controlling the market, that the economy is stable, that the economy, people are buying at a low rate, and it keeps going up, Why three cross tells you that what is coming down? That means that what? The market is what? Is strong. Market is on the high side, and people are selling on top. And when people are selling, market quotes, but the sellers are dominating the market, and the market comes down. Now you can see that these three cross, you can call it three cross or three bearish candlesticks, they are coming down. You can see that there's no bullish in these three cross. So there's more of what? Sellers. Sellers are dominating the market. That is how simple it is for you to understand. Sellers are dominating the market. That is three bearish shows that what sellers are controlling the market. So at this point now, you need to watch out on the trade. Don't just enter when you see three crowds. You need to, when you draw your technical analysis, wait for the next candlestick to form. Is it going to form a hammer? Is it going to form a doji? Is it going to form a shooting star? So at that point, when they form a hammer now, people can replace hammer with what? With pin bar. But it's advisable to also trade pin bar or hammer, or you are trading shooting star. So you can also trade engulfing candlesticks. But it's two main things that it's advisable for you to trade: a pin bar and engulfing candlestick, or a hammer. So when you see a doji, it shows that don't enter that trade. That trade shows that the buyers and sellers are equal. There's indecision in the market. So even a morning star, you need to watch out for the next candlestick that is going to form, and you can see that bullish are in the market. Now, that is that about candlestick patterns. So this gives you an insight, understanding of the market, and it's important for you to use your technical analysis and candlestick patterns when you are trading, so that you not just be guessing, you just enter trade anyhow. You need to understand and wait for the candlestick to form. So when it comes to a hammer, you don't go and see a shooting star and you go and enter hammer and you go and buy. No, if you see a shooting star when you're doing your strategy, you don't need to enter that market, because the sellers are dominating the market and expect it to come down. Now you see that when you see a three soldiers now, you see a shooting star and you want to keep buying, You can't keep buying now because the sellers are pushing it down. You have to wait. Or when you see a three core and you see a hammer, you can't keep selling. You have to wait because you're expecting it to what? To be bullish. You understand? You can't keep selling when you see a hammer in these three cores. You have to wait. Understand the market, whether the sellers are going to dominate the market or the buyers. Because a hammer shows you that what? Buyers are dominating the market. There's an upward trend. So you need to calm down, understand how the trend flows. It tells you, gives you an idea of the trend. When you see a doji now, for example, now, when you see doji, now morning star, some people will still go and be selling. And you see a doji, some people will still go and be selling. And if it now forms a, like now, see morning star, what if it now forms the opposite? So you need to understand that you need to wait for either a hammer or shooting star or what, engulfing candlestick or a pin bar, which is very, very important for when it comes to trading. When you see three cons and you see a hammer, you need to know that there's something happening in the market that I need to be patient to understand. When you see a hammer, it shows that bullish is taking over the market, the buyers.